going on, everyone? In this video, we're going to review and recap the past 2 days of the market, some trades we took in my Discord community, along with some trades that I took. And then we're also going to talk about how to trade the market at all-time highs. I'm getting a lot of questions about that. So it's going to be a very good video. If you're new here, make sure to hit that subscribe button below. And if you want a very good trading resource, I'm going to link my Instagram. I post daily trading recaps along with very good trading tips and tricks. You're definitely missing out if you're not following. Be sure to click the link in the description below. And without further ado, let's get right into the market. To get more context, let's go over the pre-market plan that I posted in the Discord from yesterday's action on Monday, April 5th. So I said it's going to be very tricky to trade the S&P 500. We're at all-time highs. So there's zero downside pressure, zero resistance, and zero reason to be short unless supply forms, and then we could short rallies inside of supply. So that's essentially how I play all-time highs. Or if we pull back into demand and we had level at 4,026, pretty crazy to say now 4,000. So we would need a pullback to get long, or we can wait for any speculative supplier demand to form, and then we can play based off of that. If there was low volume, no volatility, I would not recommend trading it. So now this is what we looked like going into the market open yesterday on Monday. And we had the 4026 and 3/4 demand zone that we were watching price to sell off into. So the first 5-10 minutes of the market open, we did rally about 6 points, but this is a 15-minute period and we moved in a 10-point or about an 8-point range at all-time highs from the gap on Friday. Then the market started rallying, and the problem I have with trading all-time highs is people, as soon as they start seeing some type of momentum stall to the downside, they immediately, or even like a little pullback, they immediately start flipping to a bear and they start shorting the market. So the way to play all-time highs is to avoid the short side unless downside pressure gets put in. Whether you're talking about resistance, whether you're talking about supply, whether you're talking about a sell-off and a rally failing, creating a lower high, you need to have downside pressure by the bears. At all-time high, we're just going to keep fueling higher and higher if you have shorts into the market, and we keep rallying because they're covered, and them closing out their position will fuel a short squeeze even higher. So unless there's downside pressure, that is the only way to short an all-time high break. And the only way that I prefer long it against, or not against, with my edge is waiting for a pullback into demand to get long. So just because the market comes up doesn't mean I have to buy it. And just because the market comes down does not mean I have to sell it. I have to wait for my edge to be present. If I trade based on what I think is going to happen or based off of my intuition or my feeling, I'm going to get burned. And if you do the same, you're going to get burned as well. You have to trade only when your edge is present. And at all-time highs, it's kind of tougher because we don't have supply and we're gapping up away from demand. So yes, the market did rally and there really was not any setups on this. We did not balance out. We didn't have one point that there was an equilibrium really between buyers and sellers that we could have speculated that new demand was going to form. We just rallied to the upside. And at any given point, let's just say I wanted to get long, I don't know, anywhere in this area right here, I would have felt like I was chasing at any given moment, especially at a half number, 4,050, we could have sold off. Then a quick push up, you would have more buying. If I got long up here, I felt like I was chasing. My risk to reward was skewed. Yes, we could continue to rally, and yes, it would have worked out, but it did not fit to my criteria. And when I don't see my criteria and my strategy that I stress the members all the time being hit, I'm a spectator and I sit on my hands being very patient. So we did flag. You could argue that this could have been a valid long entry after we did base in this area over here. I love seeing bull flags. However, the low momentum, low volatility uptrend kind of killed the premiums. It was a 40-point move. However, it wasn't very clean action. And then after around 11:30, 12:30, the market completely quieted down and it was silent for the rest of the day. So here's the problem with other traders is, let's say they missed. Let's split this chart in half just like this. So let's look at the left side being one trade and the right side being another trade. So yes, you could have gained a couple of points off of this rally and it would have been a very good trade, whether you trade SPY equity, SPY options, the S&P 500 future. There's multiple different derivatives and instruments that you can trade. Beautiful trade off of that if you did see something according to your edge or according to your plan. Now, 12 o'clock comes, 12:30, 1 o'clock comes, and the market is to the right side of this chart, and we're trading sideways. There's no volatility, there's no momentum, and there's no volume. So if you missed this first move and you didn't have any skin in the game, where emotions come in is you're going to have FOMO, and you're going to want to put a trade on because you see either other people making money off of the first rally, or since you missed it, you want to have skin in it and you want to make money yourself. So what are you going to do? You're going to force trades. Let's say you saw the market selling off, you take it short. You would have been stuck in a choppy sideways action trade. Not only would you have lost on this trade, but you also would have lost and depleted mental capital, which in my opinion is something that I stress a lot. Mental capital is very important. By you staring at the screen all day long, it's not worth it. Even if you make a couple of bucks, you're depleting your energy, you're depleting your capital, and it's almost an opportunity cost for tomorrow or the day after on trades that you could have made. So that's just how I view this. If your edge is not present, you cannot trade, and do not let your emotions, this is where you have to sit on your hands, especially at all-time highs when there's not a lot of levels to base the analysis off. So just because the market's at all-time highs does not mean there's going to be other setups. There will be tons of other setups like we saw on Microsoft. It was a very clean chart. It was very simple analysis. We had all-time highs at 246.13, and then we had a little small supply zone at 243.50 that was really stopping us. The last time, and the reason the zone formed was because sellers were strong. So if buyers were strong this time, we would come up and test all-time highs. If sellers were strong, we would reject the zone. The key is to see how price reacts. Every trade you do, no matter what level you base it off of, whether it's support, whether it's resistance, supply, or demand, you have to see how the participation and the participants react to that level. So now going to the Microsoft chart, if I pull up yesterday's action, here is the 2347 supply zone from the pre-market plan. So the market rallied. This was a strong zone, hence a supply imbalance. We rallied into the zone at the same time the market was rallying, especially NASDAQ was stronger than the S&P at this point. And we came into the supply zone, and this is where flipping through the time frames comes into key and knowing the trade that you're looking to put on. If you're on a 1-minute chart, we sliced completely through the supply zone. And what that tells me, especially that it was a 60-point zone, was buyers are super strong and sellers have no commitment to hold this thing down lower, especially with all-time highs around 246.13. So the market rallied, we came above this supply zone, and now this becomes invalid once we're above, and you could actually remove from your charts. But just to keep this on, just for an example, so then we started selling off, and then we found a bid right at this 243.50 zone, and we started rallying to the upside. This you could have argued that was a potential area to get long. I know some members actually made a lot of money on this trade in the Discord. I stayed away due to not really a clear setup. I couldn't really paint the picture too well. I didn't know what the market was doing, but then we did rally, and we were so close to all-time highs. And at this point, buyers really put in a lot of work. So you have to imagine that we are going to rally and test the 246.13 all-time highs. So then we came up, and then this thing just started rallying very aggressively. And just like the S&P, if you chase, let's say, up here, how do you know this isn't going to be the high? We're at all-time highs. Let's say you buy up here. How do you know this is not going to be all-time highs and sell off? So there really wasn't a clear entry on this. We did not even consolidate for a little while to pick up more orders or pull back into any demand that formed. This was just a straight ride up. You can make money off of it, but based on what I know makes me the most amount of money, I avoided this. That's why I didn't take a trade. And if something did occur where my edge was present, 100% would have taken this. But it was a nice rally. Just from that simple analysis that buyers were super strong compared to the sellers at that supply, and they have to just squeeze a little more juice out, and then this thing rallied 6 points, almost 7 points from breaking above supply. Same thing with Facebook. So pull up the Facebook chart. Let's go to the pre-market plan on this. So this was yesterday again. Facebook is strong compared to other stocks, rallying near all-time highs into 298.88 supply. Key for me is 300. Above it, we could test the 304 all-time high. Below 300, we based inside of supply. we could see a sell-off speculating that supply is going to be put in and a triple top will form. So we opened up inside of the supply zone right away. It's telling me buyers are a little stronger. NASDAQ is strong. This thing started rallying. We did base out here and we were holding VWAP, and VWAP was stable. Volume was stagnant as well. And then we started taking off with increasing volume. 304 was all-time highs. I think it was a little above 304, like 304.10 or something like that. We rallied, increasing volume past all-time highs, broke above the supply zone, pulled back, picked up more orders, and I liked how we held the high on that pullback. Volume started increasing, and then this thing rallied, and just like Microsoft, had a beautiful, nice move all day, and then around 12:30, 1 o'clock, that's when the sideways action happened. And if you missed this move, your emotions would have been flaring right here, trying to get in, and you just would have been caught up in chop. So opportunities all over the place. The key is finding the right ones and sitting on your hands until your edge is present and until the market presents its proper opportunities. Amazon from the pre-market plan, I was interested in playing calls above 3178 to 3181 if price action is strong. We had very minimal supply and above resistance. The nearest one was around 3204 and the gates were open, nothing stopping price from rallying into that zone. And you can see that's exactly what happened. We were at the 3175 in pre-market and right inside of supply. So I wanted to see a strong move from buyers early on, unless it was going to be a tricky trade. So the market did open up and sellers really did not get rewarded inside of supply. We were just holding value inside, kind of creating more fair value. And one thing I have to say about Amazon is it's very, very illiquid. And you could tell just by the gaps on a 1-minute chart, just speak for itself. You know, low volume will make this thing gap up, make it gap down, especially on a 1-minute chart. So very illiquid. I definitely did not enjoy trading this. However, I saw this very strong green push up like that. I love seeing thick green candles. Rallied to 3186 above supply, above resistance, and then the next candle opened up, rallied again. I did not take it long until 948. I played the 3200 calls. Once I saw price consolidate a little bit and we started moving up again with the volume convincing, I took it long, got long around 31 bucks, 32 bucks, and then I sold right at full position, right at this target, 3204, right from the pre-market plan. If you ignore the noise and you trade the levels and trade your edge in your strategy and don't let your emotions get involved, it's very powerful just by doing what the market's telling you. Once we were above this 3182, nothing stopping us from coming into target. The key is just finding price, seeing what it's doing, and getting a proper entry with proper risk. So it was a quick 3-minute trade, and I made about $5 on each contract. You trade one contract for $3,000, you're making $500 per contract. Trade 10 contracts, you're making $5,000. So pretty good trade on this. Then we were flagging. We broke above the flag, tried to get above resistance, and at this point, I did not watch it due to the action that the market was telling me. It was choppy, consolidating, low volume at the highs. I want to ignore setups like that. The quality becomes so much lower, and it diminishes the type of returns and the type of setups that I enjoy trading. But we did rally on low volume. I don't like seeing gaps, especially on Amazon, but it happens. If I do recommend trading it, it's only when we have large, thick candles like this, where there is volume and there is a clear direction with strong volatility. And today on Tuesday, April 6th, the S&P 500, our plan was now we created somewhat of a little supply zone at 4,067 and 4,069 that I would be interested in taking the market short if sellers can be responsive at that price. If they aren't aggressively selling above 4,067, I'm going to avoid the short side and it could be another day to the upside. Same demand from yesterday's plan, which is a little lower. So this is what the market looked like pre-market. We were kind of flat, and flat pre-market basically says that the market's balancing out, and the rules are basically to take away from balance. So then the market opened up and we started rallying into that 4,067 supply zone and 4,069. But again, nice strong green buying pressure volume down here. Very strong green candles to the upside. In fact, in the first 20 minutes of the market open, even 30 minutes of the market open, there was not one red candle inside of supply. There is no reason to take the market short. Again, it's all about seeing the responsiveness or if buyers or sellers are agreeing that this is fair or unfair value at a imbalance. So the market rallied, buyers strong, sellers are not really present and being responsive to price. We then rallied and we broke above the supply, so now it technically becomes invalid. And within the first hour of the market open, I was telling everybody in the Discord room, in the intraday commentary tab, where I update members throughout the day of my thought process and what I'm seeing set up. I was saying, listen, it's a balancing day. You're going to have tougher setups. You're going to force things, and stuff that may look good might not be good just due to the conditions that we're seeing. So it was an early red flag. It's best to avoid days like this, especially if you're going in with a larger size and thinking it's going to be a same type of day like we saw, 2 weeks ago or 3 weeks ago, even last week. And the market consolidated to about 11:30. We broke the high, and again, another red flag is came above supply, failed to stay above the high, made a high at 4,076, started selling off, and we aggressively moved past VWAP. Volume really nothing too convincing there. However, since we are below or above supply, this does become invalid, and we did actually create new supply, if you want to call it, in this area here. And if we want to extend it, act like this is a pink supply box, then the market did rally, and this is where shorting rallies comes into play, because if you did take this trade short here, you could have got a nice about 10 points from that if this was a pink box as supply that was formed earlier in the day. But really, it's a balancing day, and if you compare candles, so I said this in one of my last videos and I talk about this in the course, think of price and the candles developing as where has price been rather than what is price basically portraying in a candle standpoint. So what I mean by that is we had a low at 4,058. We had a high at 4,076. That is our low and that is our high. Are we making moves above the high, below the low, or are we consolidating inside of this range? It's a balancing day where the equilibrium is balanced or equal between buyers and sellers, and balancing days mean no trades, and the opportunities are going to be very few and select, especially on the market and other equities as well. So this is the type of analysis you need to be done, not only in going into trades, but analysis needs to be done on staying away and understanding when your edge is present and when to be a participant in the market or not. So don't let your emotions get the best of you. When the market's at all-time highs, it gets a little trickier, but there are still tons of setups and there are different ways to make money. You just have to adapt to the market conditions. You have to have a capital growth mindset or a capital preservation mindset over capital growth. If you play defense over offense in this market, your defense is going to win you the championships. And if you win the championship, you're going to get rewarded in a monetary form with trading. So keep that in mind. Hope you all learned something from this. If you did, be sure to drop a like. If you want to learn more, check out the course that I offer. The website is linked in the description. Also, be sure to follow me on Instagram, a very good resource. Besides that, I'm going to end it here, and I'll see you all soon. Peace.